U.S. stock markets continued their bullish run and finished higher on Tuesday, supported by the U.S. trade optimism. Besides, the number of newly confirmed coronavirus infections in the U.S. has dropped. New cases have been below 50,000 since mid-August. Meanwhile, fresh economic data painted a mixed picture. New home sales soared 13.9% in July to a seasonally adjusted annual rate of 901,000 units, the highest level since December 2006. Meanwhile, the Conference Board Consumer Sentiment Index fell unexpectedly to a 6-year low this month. As a result, the S&P 500 and Nasdaq Composite indexes notched fresh record-closing highs on Tuesday, while the Dow Jones Industrial Average ended slightly lower. Despite the U.S. stocks advanced to new highs, Asian equities were on the defensive on Wednesday amid lingering uncertainties regarding the global economic outlook. However, losses were limited as top U.S. and Chinese officials reaffirmed their commitment to a trade deal. The Hang Seng Index slipped 0.07%, while the Shanghai Composite traded nearly 1.5% lower. Japan's Nikkei dropped 0.12%, while the MSCI index of shares outside Japan slipped 0.1%. European markets closed after some hesitation earlier in the day, with gains being led by the DAX 30 index after the German government agreed to extend its coronavirus stimulus relief until the end of 2021 in an effort to help Europe's biggest economy through the crisis. Furthermore, France's government gave further hints about the contents of its €100 billion plan to boost the economy. Initially due to earlier this week, full details of the stimulus package will be announced on September 3rd. The CAC 40 closed 0.80% higher on the news. The Pan-European Stock 600 index closed up by 0.8%, reversing earlier losses. As for individual stocks, Denmark's Ambu slumped nearly 13.50% after the diagnostic company revised lower its forecast organic growth for the 2019-2020 financial year. On the other hand, Sweden's Elekta shares jumped 11% after the radiation equipment maker reported a spectacular jump in profit during the first quarter. In the U.S., durable goods orders reports for July showed better than expected numbers. The report showed that orders surged 11.2% in July, compared with expectations of an increase of 4.3% and 7.6% increase a month earlier. However, demand for industrial goods was less robust if autos and airplanes are excluded. New orders rose smaller 2.4% minus transportation. The dollar weakened following release as the data pointed to an uneven recovery in the sector, fueling concerns over the health of the U.S. economy and the outlook for its further recovery. As a result, the euro-U.S. dollar trimmed intraday losses and settled above 1.18 on the negative side for the euro. Italy reported its highest case count since May 12th, with numbers rising well in France, fueling concerns over a second wave of coronavirus. Meanwhile, oil prices climbed to fresh March highs around $46.50, but failed to preserve its bullish momentum and retreated marginally, setting around the 200 daily moving average. Overall, the market is supported by storms in the Gulf of Mexico. Hurricane Laura rapidly gained strength Wednesday to become a Category 4 storm, suggesting further contraction of oil production could be expected in the days to come. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.